Well, good morning. And to those viewers at home, thank you for joining us as we have a panel of esteemed colleagues and members of the MCIEF. And for those who are not familiar with the MCIEF, it's the Motor Carrier Insurance Education Foundation. And as indicated by the E, education is truly the foundation of the foundation. And we've got the who's who of transportation with us today, speaking to us about a number of issues as it relates to submissions, if you will, and how those are presented. But before we get started, I want to recognize to all our viewers out there, if you're not currently a member, please go to the MCIEF website, that's MCIEF.org, join as a member, and then start participating in our educational opportunities that are going to be presented here throughout the year. You'll find that there's an upcoming event in Arizona, the mid-year conference, and who doesn't want to spend a couple days in the beautiful Arizona desert in May? So I would encourage you to join. And then secondly, you'll have the opportunity to rub elbows with some of the folks on the panel as well. Again, the who's who of transportation. So as we get started, first and foremost, let me introduce myself. I'm Drew Easton. I'm with Amwin's Transportation Underwriters. As you can see from the beard, I've been around a while. I'm an old claims guy and also an underwriter by trade with a deep and narrow understanding of environmental and hazmat risks. And as we go through the panel, I'm going to use the Brady Bunch style here and start with the top left quadrant of my screen. And let's start off with Doug Hathaway. Maybe introduce yourself to the folks.
Hi, everybody. I'm Doug Hathaway, and I'm with RT Specialty as president of transportation. And we specialize exclusively as a wholesaler with a lot of transportation companies. And my background is 30 plus years on both the MGA side and as an insurance carrier. So have perspectives in both.
Great. Moving to the center, how about Mike? Mike, introduce yourself, please.
Hey, good morning, everybody. I'm Mike Mitchell. I'm with Risk Placement Services. I sit in Charlotte, North Carolina. I've been my entire career in transportation insurance, so it's something that's near and dear to me and have a passion for. So appreciate everybody being here today that seems to share that same passion about it.
Great. And let's go to Brenda Weiser for the block.
Good morning, everybody. I'm Brenda Weiser with Reliance Partners. I am our Chief Marketing Officer, and like everyone on this call, I've spent my entire career in truck insurance. Love truckers of all kinds, small to large. So one thing I always like to say, we don't like to leave any truckers behind, and this is something that MCIEF can really help you with, every kind of trucker.
Excellent. And we're going to jump over Tommy for just a second. Let's go to Jeff. Jeff, introduce yourself, please.
Hi, everyone. Good morning. Jeff Tyler. I work at TS and Insurance Quantified. We have a SaaS offering that we actually work with and partner with a lot of commercial trucking carriers and MGAs to help them get insights into risks, process their incoming flow. And, we've been working with, several different players in the trucking space over the last several years. Really excited to be here talking about this topic.
Great. Well, thanks for being here. And last and definitely not least is the kingpin himself, the son of a trucker, Tommy Ruke. I can say most of us probably can as well. We've got decades-long relationships with Tommy. Mine goes back to 2004 when I jumped from the carrier side to the wholesale side, and I quickly became a very much an acolyte of Tommy. His passion for transportation and his passion also for education has been key to the development of a lot of folks in our industry. So Tommy, how about a couple of comments, my friend?
Well, that's all there. As you said earlier, we're dedicated to education, and my objective in life has been, since I was a son of a trucker, is to mirror what I learned growing up as a trucker son with what I've learned about insurance and put the two together and explain to the insurance industry trucking and to the trucking industry insurance. And we do this as often as we can, and that's our objective, just to make it easier for both parties to deal with each other, because there's nothing more a problem than someone who doesn't know what they're doing and writing an industry they don't know. And it's better to raise everybody's boat by having this common education on both sides. And so my objective is that. And as Brenda said, my passion is truckers and taking care of them. This is the whole purpose of this, was to make it easier for truckers to obtain insurance and obtain the right insurance for themselves.
Yep. And that's a perfect segue. Today's topic is ignorance, naivete, omission, misrepresentation, the infamous F word, fraud, in search of insurance truth. And as Tommy likes to say, lying is wrong. We pledge to tell the truth. And that's really what we're talking about here. And we've got the esteemed panel here. And what I'd like to do is jump into some of the experiences perhaps you've had so that we can teach some of the folks that are out there from our bad experiences. Hopefully they can avoid those as we go forward. And Doug, maybe starting off with you, recognizing some of your past experiences with respect to the presentation of a submission, what are some of the challenges you faced or you've seen, and perhaps how you address those?
So, and first of all, it's really a thrill to be on this panel with everybody. It's crazy how much experience we've had in these topics. But I would say the hard thing for me really has been who knows what, as far as when you're looking at an application, was the application filled out correct? Did the information from the motor carrier, match what you see otherwise? And sometimes you have to look at that. And I was always raised on contradictions, and there's always contradictions as information's expanded in our industry to look and say, do you really have more vehicles, or do you really have, is that really your revenue? And so it's just, to me, whether or not, sometimes as an agent, you have to counsel the motor carrier. Oftentimes, when I was an insurer, I would get things directly from wholesalers and retailers, and it was really, more times than not, it was just sometimes the motor carrier not, either not answering the question or not answering it correctly, and it was up to the agent to really find out the truth. And that's always been the delicate thing for me. And I always give the benefit of the doubt from when that, probably naively, so go back to that word. But it's important that when you're, as an agent, when you work with your motor carrier, they understand the question, and that you seek the truth as far as what the answer is before you send it.
Perfect. Well, Brenda, I'm glad to hear that he didn't blame you for all that misinformation. So as you guys are
I
out
was
there,
expecting it. Yes.
you and your team are the forward-facing group that are out there meeting with those motor carriers. So how do you coach your team to get that information? And one thing we spoke about before we jumped on here is, in a lot of cases, the insurance industry has not done a very good job of educating this next group of folks, thus the need for the MCIEF, and thus the need for what we do with our teams every day. So how is it you coach these folks to get that correct information and dive down for the details that Doug needs and Mike and everybody else needs to underwrite the risk?
Great question. So, I'm kind of going back to what Doug was alluding to when, several years ago, previously I could send a summary of the operation to an underwriter and say, hey, here's what they do, here's where they do it at, here's their customers, here's how many units they have. And, that underwriter took what I gave them as gospel in that summary, because that was really the only way for them to know the risk. And it is amazing in the last really 10 years, and I would say even, the most recent 5 years, the amount of data that is now available. I would bet that my summary is now the 7th or 8th item that gets reviewed by an underwriter.
Yep.
Because the key to every account now is their DOT number. And I want to be able to plug it in to the fastest system I can find that's going to give me every bit of detail as to what that customer is doing. But to your question about, how are we coaching our people, to get correct information? I would say from the retailer's perspective, one of the things that we learned was that we needed a common application. So while I understand completely that every wholesaler, MGA, insurance company has their own insurance application, they have their own supplement, I would encourage any retail agent out there to make sure to develop your own standard application. And what that does is that trains your people from day one. This is every bit of information that needs to be collected. I'm certainly not saying that somebody isn't going to come back and ask you a question, but if you teach them from the beginning, here's the information that's needed, then you're going to be a lot more successful in the long run.
So to be clear, when you refer to an application, you're not talking about a bar napkin.
No, I'm not talking about a bar napkin. And I will tell you this as well, and this is no offense to Accord, I'm not talking about an Accord application. Okay.
Indeed.
And believe me, if anybody's on here from a court, I would love to get together with you. So, but you have to develop an application that is going to encompass everything about a motor carrier. And that's going to be, I know we'll get into all this, on this call, but, all the historical data. But, just as important, what kind of safety measures are they taking? What does their past look like from the public information that's available? What are they doing to correct things? And that needs to be on every application. You need to make sure that you're doing that. It doesn't matter if it's 1 unit or 1,000 units. You need to have that same type of protocol for every single one.
Yep, perfect. And Jeff, what role do you play with this as it relates to motor carriers, retail agents, and even underwriters?
Yeah, so usually we're sitting somewhere in the ecosystem between a wholesalers, programs, or carriers, right? So we're receiving the applications and all of the data from the retailer on behalf of the MGA or the carrier. Our role is really to start to make sense of all the data coming in, right? To organize it, to put it into a form that we can actually that underwriting operations or underwriters can actually start touching and feeling. And really start to bring in some third-party data. And this is kind of the point that Brenda's making, right? Like, there's a lot of data out there that needs to be married up to that. There needs to be validated. And this is kind of, step one, I think, in the lines of like how I view the topic today, right? Is like bringing together what the retail broker has been told, right, by the motor truck carrier, and what the data in the market is saying. And then marrying that all up so you can start to identify things and work with the broker to work through anything that doesn't look quite right really early in the process. So that's where we sit. And we work to get all this data to a place where you can start to triage it and manage it, right? So like the goal of what we do is to actually help you understand the things coming in as soon as they come in, instead of, hours, days later, and be able to identify that, work upstream and manage through that process of like, does everything look right? Are there things that look fishy? Are there things that are showing up in reports, but they didn't report on their application? What happened there? And so like, that's the part that we play in the process.
Okay, great. Well, Mike, as you heard Jeff talking about really the trust but verify aspect of us as underwriters, maybe talk about some of the things that you do trying to verify unit counts, drivers, maybe mileage and revenue, some of those exposures that are pretty darn specific and necessary for the underwriting process.
Sure. Yeah, there's a variety of ways. Obviously, we've been talking a lot about the data. Data can a lot of times reveal things. Mileage, for instance. The mileage is an easy way to kind of look at, all right, do we have more vehicles running than we really do, or do we have maybe team driving going on? Just looking at the number of miles versus the number of power units that are showing up on our application can help us, guide us, and figure out, all right, are there vehicles that are not being scheduled that we need to be adding to our schedule here? And obviously the whole reason we would ask that question because the MCS 90, that's really what pushes that, because our carriers are going to be on the hook for that exposure regardless of that vehicle being scheduled or not. But something that also comes up, I'm looking at our panel here, and all of us have been in this industry a while, so we've seen a lot of these accounts, and we've got systems that allow us to see historical information. And even when we get submissions in, I know as an underwriter, you get a submission in maybe on Monday, and then Tuesday comes along and that information differs. And so it kind of causes us to hit pause and say, all right, we're getting conflicting information here. Or maybe we looked at this account in the previous year. And so that we use all this information in front of us to kind of put together the story, maybe pose questions. And we've got good relationships with people like Brenda or other retailers that, all right, hey, here's what we're seeing. Can you give a little backstory on it? A lot of times, we were kind of talking about before, sometimes we've all been burnt by a bad situation. One bad apple can ruin it. But as Doug said, you try to give everybody the benefit of the doubt, and you just go in there and asking questions, and maybe there's more to it. Maybe, okay, that makes sense. You're telling me this is what's going on. We've actually got team driving. That makes sense. We're not hiding any vehicles here. All right, that just changes our approach to it. It's just asking questions and going with that relationship that you have with your retailer or your company underwriter to be able to explain the data that you have in front of you.
Perfect. And Doug, staying in kind of that vein, I think really what we're talking about is when we see these anomalies or these errors, it could be an omission or it could be intentional. It could be the commission of an error or the infamous F word. Maybe explain from your experience some of the ways you've addressed some of those fun experiences.
Yeah, I'm just a talker, which I'm trying to hold back here, but I really ask questions, and really that's sometimes the best you can do. I'm reminded of, I had an insurance company called Maxim, and it was really specialized. Drew was one of my agents, but one of my questions Drew remembers is I really wanted to know truck drivers that took regular routes and freeway hauls, because that, to me, regular is better than irregular and familiarity. And so I had a question in my application that for about the first year, it was filled out like 100% accurately. And then when they figured out, it seemed like when people figured out that the rate went down with a certain answer, that the question was sometimes not accurate when, a truck driver had miles in 48 states all over the place, but they were taking freeways or regular routes, I should say. And so I think to your point, Drew, like, an error and an omission, you really walk the fine line, and the carriers really expect that you ask the question of the motor carrier, you use the data that we just talked about that's out there to kind of verify the answer, because sometimes they might not even understand that question. Do your drivers have regular routes? And so, again, I go back to that, like, does everybody understand the question? And then what's the outside data that you can use to verify it? And sometimes when the answer was bad, that question wasn't filled out. That's an omission. So, and I see many apps conveniently with the question not filled out, and it's really up to us to go out and make sure that the questions are filled out. And so anyway, I hope that answers your question, Drew.
It does, and I think that leads us to, really what we're talking about here, and what Tommy preaches is to tell the truth. Don't try to manage, the conversation or manage the underwriter. That's really what the underwriter's role is to recognize the risk, get their arms around it, and understand if it fits in the appetite and how they can price it. Unfortunately, where we do get into trouble, when we find ourselves digging out of a hole, is when that managed process comes in. And I don't want to say it's misrepresentation. That's probably too strong of a word, but not recognizing how important this piece is. So, bringing in the kingpin himself, Tommy, as you preach telling the truth, I presume that you've run into some scenarios where, as I mentioned, some folks are trying to message and manage this message, and that creates more problems downstream.
Yeah, 3 or 4 things, and I'll be quick. Jeff, I don't know if you copied me or heard me, but you used my phrase. An application is to give the underwriter a warm, fuzzy feeling about the risk. And I've used that often in my programs. Before you push send, make sure that you'll do something. To build on Brenda, there's more data here than ever. For you who are listening to us who are not specialized in this and haven't been in our programs, there's more data available for trucker than any other industry you'll ever do, starting with the public data. And then second, what we have to augment that public data, which is now really recent here, and this is the ELD information. Today, there is nothing the trucker can hide. If the retail agent doesn't realize that going in, they're going to end up shooting their foot. They're going to shoot themselves in the foot. I remember Doug telling me often, I remember the bad risk more often than I remember the good submissions here. And if an agent gave me a bad risk, they're going to have to be many years for overcoming those kind of things. And so this is what we're saying. They need to access all the information possible, do it. Another thing they got to be willing to do, if the insured is not willing to share the information with you, if the insured is not willing to have you to assist them in being better, then walk away from it. There's plenty of risk out there who need help. There's plenty of risk out there who will accept this and give you all the information. This is where you get in trouble, retail agents, by not knowing the insured and not being able to then screen the ones you did. The last thing is, I think it's important for us to understand the insurance business, not the insured understanding insurance. And this is where we have to cross that line. They don't know why the F is important or CSA is important or driver there over a year are important. We have to explain to them why those things are triggering of cost, dedicated routes, as Doug said, cost of this stuff. And today and in the future, the underwriters can tell me if they're not willing to share their ELD information, which will actually tell us the vehicles and the drivers and exactly where they're going in the future, they're going to pay a price, meaning cost more money to them because they're not willing to share that information. And we know it's there. So if we can't have it, we're going to price it as if we can't have it. If we do have it, then we're going to price it that way. So I just want to accommodate everything you said and just reinforce it and try to put all those things we just talked about together to remind these agents who are listening to us, or wholesalers, or underwriters, what they should expect with the retail agents.
Yep, fair enough. Now, Brenda, as the retail representative on the panel today, I suspect you probably had some experiences where you've presented a submission, somebody else has presented a submission, your information's accurate, theirs isn't quite as accurate. How do you deal with the carrier on that if they just ignore you pointed out the obvious, that things aren't quite as they recognize them to be? How do you address that?
So, a few different comments I have, kind of, backpedaling a little bit, but, your submission should be a total act of natural curiosity. That's really the way I look at it. You should be asking questions until the whole story fits together in one circle. Okay. If you tell me you're a local hauler and yet I get your IFTAs and I see you in all 50 states running miles, hey, I need to go back. There's a curious question for you. I need to go back and ask some questions on that. Now, once I have my curiosity satisfied, now I'm able to build my story for the underwriter. So when I send it into the underwriter, I feel pretty confident that I have a good story because I've checked, and double checked what the customers told me, what the public data has told me, and what I've received. Maybe that's loss runs. Do these loss runs make sense with everything that they've said? So when I have a situation where we send the application into the underwriter and maybe it's Mike, and Mike calls us back and says, gosh, this is what your submission says, and I can't tell you what the other one says, but it's a whole lot different than what you have. One of the things I really love to do is I like to turn around and go back to the customer and say, can you sign off on my submission that I sent in? Can you double check these vehicles, double check the drivers, look at the narrative that I provided, and send me something back in writing that says, yep, that looks good. And I love providing that to the underwriter because then no matter what happens, it happens, but I feel good about what I've provided, and I've tried to be as above board as I can be, understanding that, sometimes the customers almost sometimes outwit themselves. They think they're doing the right thing. Someone has led them in a different direction. But again, if you are a truck insurance professional, you should always be able to tie the whole story together. And that's where I think our underwriters, they build confidence with agents who can tie that whole story together that way.
Fantastic. And speaking of stories, Mike, we'll pick on you for a second here. So often, us on the wholesale side, the underwriting side, et cetera, we're presented with the submission, and the next comment comes in from the retail agent. Hey, there's another quote we're up against. Is it a legitimate quote? Is it, fantasy? Is it a phantom, a decoy, what have you? How do you deal with those scenarios as an underwriter when that comment is tossed out? What are your next steps?
Sure, yeah, it's kind of like sitting at the poker table at times. All right, they say they've got pocket aces. Do they really have those pocket aces? That's always a big challenge, and you want to work with your carrier partner. You want to do what's best for the insured and get them the most competitive rate. You trust your retail relationship at that time too, because sometimes they're the ones that feel the pressure that, all right, they come back to me. Let's say Brenda comes back to me and says, Mike, we've got our insured has a competing quote with another retailer that's at this. And that's where I would kind of sit down with Brenda and talk through it. All right, is that market really a viable market? Are they just, rattling off a random market? So you have to understand the scope of the kind of who the competitors are. And then you kind of look at whether or not that is really a possibility or not with that market. And then if you do, what I'd suggest Brenda to do is come back and say, all right, can you see if you can get a copy of the quote? That way it does a couple things. One, it maybe validates whether or not that's a true quote out there, but then you can look at the coverages and say, all right, Mr. Insured, Mrs. Insured, here's what we have here. You do have a competitive quote, but what you're missing is these coverages here, or what it doesn't have is maybe you have different mileage on there that is maybe overstated, or maybe you're lacking certain drivers that might have driven up our quote. So it's trying to get that transparency, and Tommy kind of alluded to it too. If you're finding you're getting the runaround, maybe it's time to cut and run. And if you're not getting comfortable with that situation, maybe it's just you say, you know what, this is our quote. You know, if that is as good of a quote as you've got, then that's probably a good quote to take, and you kind of hold the line with it.
Yep, fair enough. Kind of staying down that path, Doug. We always ask for target pricing. You know, if we can get incumbent pricing, that's helpful too, but it's really that renewal target. You know, how do you address those scenarios when we know a fanciful number is thrown at us and they want $1,000 per power unit for that 50 state motor carrier that Brenda's talking about, which I don't know how you get 50 when there's a Hawaii, but I get it. But nonetheless, how do you address those scenarios when a ridiculous target is thrown out?
Yeah, that's a great question. And what I typically will look really hard at making sure that I have the right information. Oftentimes, I have more or less vehicles on my schedule, and that impacts the price. But when it's really, different, or let's say lower than what, I think the market is, then I, as an underwriter, I go back and just tell them that, that's a really good deal. It's okay to shop. I can provide you an indication of where our markets will be, but they won't be there. And it's really good to be upfront that way. But what's happening lately is you do that and you're way off, and you come back with what you think your markets can do, and they ask you to go for it after they, and a lot of times they haven't gotten the renewal quote. It's really what was expiring, and so if the renewal goes up significantly, sometimes the motor carriers get upset. I can't tell you the number of accounts that I would write, at or a little bit below what the renewal price is, just because they're upset how high the renewal price went. They're almost penalizing their current insurer. But I just think being upfront and really, making sure you're apples and apples, like somebody said earlier, and then and then coming back and just saying what you can do, not overpromise, but then that's the best way I've treated target pricing, and I think it's really important. I would say, it just saves a lot of time to know, for their agents to really understand how the current insurance is being priced. What is the pain point with the current insurance company? Why was the motor carrier looking to move? And sometimes it's rate fatigue. Sometimes they've had year after year of rate increase, and they've gotten over adequate. They've gotten to a price where my insurance companies would gladly look at that. So, and I would come back and say that. But other times, these guys move every year, or they want to shop hard every year, and it's the lowest price always, and not the most value, the most coverage, and that's just a different buyer. So I really love target price. I actually like expiring better than target in a way, because, like you said, Drew, target is kind of unicorns and rainbows sometimes, and expiring is expiring. I guess I should have said that early on. I think expiring is much more important, and making sure that how it's been rated and what the expiring means, if the deductibles are right, and then you go to target. Certainly is an aspiring level.
If I could just add on to that a little bit, Doug, amen. Like, expiring pricing really, to me, is what we need to be talking about in the beginning, because that gives the underwriters an opportunity to say, look, we aren't even close to this kind of expiring pricing. So unless you're finding out that this insured's getting a very large increase, we may not be your spot. But during the course of underwriting, that's when I want to talk about, okay, what is the target? Where do we want to go with this thing? But expiring definitely is a big deal. I think, target pricing, a lot of times people are just throwing out numbers. I really don't know, as underwriters, how you even look at that information that comes in, because they're just throwing the lowest thing out that they can think of. And quite frankly, it can only hurt the customer, because you may decline the account based on a target number. So, just something to think about when we're sending accounts in.
Yep. We've talked a lot about truth. We talked a lot about accuracy. You know, the one thing that we all realize is that the policy, the contract that is written does have some provisions in there that allow us as underwriters to cancel the policy for misrepresentation or for some other exposures that weren't necessarily disclosed or that changed throughout the policy period. So this is maybe for everybody out there in the group. As we have a risk that's presented and the insured, the motor carrier, or the retailer, somebody knows about the growth that may be coming with that risk, and then all of a sudden it hits us and we're not aware of the growth as underwriters or as the carrier, how do we respond to that? Is that one of those automatic things that we're going to send notice of cancellation for material change or for misrepresentation? How do you folks all see that? And then Brenda, obviously on the retail side, how does that hit you? So maybe anybody out there just jump in.
Yeah, I'll go ahead and jump in. You know, no one likes surprises. Kind of what you were almost mentioning there is, you know, I'd rather know that up front ideally. That way we can talk through it and prepare the company, because I think when you get that surprise, the initial reaction from, I think, a lot of companies is, all right, this is not what we wanted, and they kind of go to, all right, DEFCON 5, we're getting off of this. But, you know, I think a lot of times we have to hit the pause button and say, all right, let's understand this. This is where I think on the wholesale side, we'll go back to the retailer and say, all right, help us understand here. Here's the situation. What's going on here? You know, a lot of times when we see this growth, you know, insured's not always necessarily thinking about what's my underwriter going to think. They look at the business opportunity. They look at what they have in front of them. And, you know, I can't fault them for taking that. You know, they're looking at it, but the key is always going to come down to communication, working with their retailer who can work with their wholesaler, who in turn works with the carrier underwriter to kind of explain this. So, you know, a lot of times I like to try and hit the pause button and avoid going down that route of sending out notice of cancellation for material change in risk, but just understanding it, seeing if we can get our head wrapped around it to understand it, see if we can make the adequate changes that would make everybody happy with it.
Yeah, we definitely, this is a big topic of conversation for us on every customer. We talk with them about what their growth strategy is, because we understand that the markets don't necessarily love growth. So let's make sure, you know, going in, like Mike said, that we're upfront with what's happening. Now, does that mean we know what's happening, you know, when we buy an account? No, this guy, he's had 2 units. He's had 2 units for 4 years. Jeff can verify it 14 different ways and all of his, you know, electronic data. And, you know, all of a sudden he, you know, midway through the policy term, he gets a big contract and he needs to add 8 units. And we may call an underwriter and the underwriter says, oh, we only allow, you know, growth of 1 truck. Okay. You know, and so on the retail side, you know, we have to find an answer for that. So, so again, I would encourage all retailers out there that when you're binding coverage, you know, or pre-binding, you know, when you're talking to your underwriter, what is the company's position on growth, and also talk to them about what your motor carrier's position is going to be, you know, as to whether or not they're going to grow, because you want to know that going in so that there's no surprises midterm if, you know, they want to double their fleet size.
That's the important
Any thoughts
part.
on that? Oh, I'm sorry, Tommy, go ahead.
No, I was going to the important part, Brenda, is some companies have those limitations in growth. Clearly, we understand that. You got to talk to the insured about that up front. If it comes up a situation where they do have the push and they need to add, then that's the time you talk to the incumbent carrier and said, okay, can we have a flat cancel, not a flat, but a pro rata cancellation on it? We'll put it somewhere else because you're not willing to do that. There are 3 other things involved in that phase that you mentioned of misrepresentation, concealment part of the policy. It says if you knew it, you would not write it. And so sometimes just because the growth wasn't there yet, you would have if you knew about it. You can't invoke that. Second is after the risk has been in business for 60 days, in most states, a couple 90 days, you can't get off of it except for non-payment or that. The third thing is, and more the threat I see in some of this stuff is to increase the premium. Meaning if they hide the vehicle, send them a bill for that other vehicle here, because this is our job, is getting paid for what we're doing. So a lot of times then they'll self-cancel it by not paying it, and then we can invoke the non-payment provision in it. And lastly, as part of here that Mike talks about, so MCS 9091X, we've got to give notice of cancellation 35, 36 days, even for this part of it. So the answer to it, as Brenda says, is be careful about that. But the last thing that worries me, and Brenda, I'm sure you see this, and agents, wholesalers, you see, retail agents never sign the application for the insured. Make sure the insured does it. Make sure they do, like Brenda says, send it to the insured and make them verify that that is what's there. Because all those applications say under penalty of fraud, or this is where we base this stuff on. Without their signatures, tough to do that. Even the thing that most of you haven't ever looked at is the 150 says under prejudice of fraud, anyway, it's that penalty for misrepresentation. In that, even on MCS 90, it says it's a prejudice, it's a penalty involved in that. So read the application and clearly make sure the insured understands that we're relying on that information to write their risk for what we agree to quote to. This is going back, and this is the communication that Brenda talked about having with the retail agent, with the insured.
Yep. And Tommy, sticking with you for a moment, I know you have constantly spoken about cargo, and we won't talk about misrepresentation, but actually disclosing what the true commodities are for a motor carrier. And when we run into situations where that specific commodity could be a new contract that Brenda was talking about due to growth or what have you, but they picked up a commodity that's not covered by their cargo insurer, and you've got a great take on that, that's probably the biggest challenge a motor carrier may have as far as staying in business. What say you?
Well, again, the cargoes are both the worst form, the greatest place of E&O, and the place will have more problems than the other because all cargo forms are different. Auto liability is pretty consistent. There's a few wrinkles in it, symbols, and there's a couple of carriers out there. So if we don't know about the driver, there's no coverage, but there's very few exclusions in there that would impact what the trucker does every day. But cargo, they're all over the board. The one case that I have here that, as everybody knows, my friend Petey Gunn and I were on separate sides of a expert witness case here because the carrier excluded copper at renewal. And I was on the carrier side that said, well, the insured realized that it was excluded. It was clearly on the application. It was excluded. Quote, it was excluded. The policies are excluded. But Petey's attitude was, well, you should have found out more than that. When they said 5% miscellaneous, you need to find out what that 5% was. So I totally agree with Petey's approach to it that Brenda said, you got to know everything they're doing. You got to spend the time to explain to them the triggering of coverage and the type of cargo that cause problems, either because they're not covered or they're limited or the things the insured needs to do to make sure that that is not excluded. To me, Drew, we've said this all from the Road Dog Radio Show. This is the greatest exposure out there, in our opinion, for that smaller trucker who is buying just a cargo policy for a certificate insurance, not knowing what they're buying and their price. And this is where, as a retail agent, you can put yourself in a position and or put your insureds out of business because of not spending the time to understand that policy and explain to the insured how the trigger coverage and what is or what's not covered and what's limited.
Yep, well said. Well, Doug, Tommy opened up the conversation, the infamous E&O, the errors and omissions. I know that we all kind of have that in the back of our mind. We try not to think about it. We try to do everything to avoid it. We try to put people in positions to be successful, if you will, in spite of themselves sometimes. Maybe talk us through some of the scenarios you have seen in your distinguished career that presents an E&O exposure, and maybe some of those that might be a little bit surprising to folks.
Well, by far and away, the greatest frequency of exposure I've seen is when the quote doesn't come back with the coverages that the insured requested. They bind coverage and they didn't really look to make that, and then they get caught on a claim. And so the question becomes, did the insured make the request to the retailer? Was the retailer supposed to know? And then same thing with a wholesaler, and it goes up the chain where you just miss the limit, you miss coverage, and nobody knows. And so I think, number one, it's the retailer's responsibility, but it's also the producing agent's responsibility to make sure that you've covered the needs of the motor carrier. So, Drew, that's what when I've had to go in, that's really been the burden of proof is, if nobody knew and the motor carrier just didn't communicate it, and even if they were asked, then it's not good. But I think most cases it's just understanding what the motor carrier had, and if it's different, why it's different, and making sure they're lined up.
The one of the experience that people might not think about, the two major ones. Again,
Go ahead, Tommy.
well, the two I might think about is audits. I've had a hired auto audit with this that was in the excess of $1 million because the underwriter didn't understand it. I've had work comp audits all the time. This is a frequent situation for that we don't look at, that if we don't go in and divulge all the exposures or explain how the audit works, you might have this hit you where now the insured gets a large audit, they're not prepared for it.
Yep, fair enough. Mike, any comments
Yeah,
on
the other?
Oh, I'm sorry, Doug.
I'd just say the only other one, and audit's a great example, but when you have a mileage reporter and you don't, and you're missing the mileage because some of the drivers report their own, and then you go out and audit that, and so I'd say both hired auto and mileage are the other two frequent ones.
Okay. Mike, any thoughts on the side?
Yeah, I think Doug mentioned some really good ones. I've seen some interesting cargo ones, like Tommy mentioned. Cargo is a big one. I've seen a situation where the insured had an opportunity to haul a computer, which doesn't sound like much until you find out it's $1 million computer and they've only got $200,000 limits. And we had no really idea that they were hauling electronics. So, those things are always fun to unravel. But, I think right now what's been pertinent in the last 6 to 12 months, or maybe even more than that, is the physical damage values right now. And just staying on top of those, making sure that they have the proper physical damage limits on there that they need, because unlike in personal lines where it's, they're going to go off of the value, the actual cost there, it's going to be stated amount or actual cash value, whichever is less. And right now we've just seen so many higher vehicle values of used equipment has actually appreciated versus depreciated. So, that has become a big concern from our end as a wholesaler, making sure our retailers are having that conversation with their insureds about the equipment value.
And Mike, to jump onto that point, you're not saying that just at renewal or at the placement. You're talking about throughout the policy, especially in today's world where we are seeing those fluctuations, correct?
Correct.
Yep.
Drew, you remember that discussion we had where we talked about it on the Road Dog Show, and the trucker called up and said the month afterwards, I checked my limit. I had $38,000. I found it was worth $65,000. Thank you for telling us to do this midterm. This was an actual real life experience where Drew and I had an opportunity to talk to truckers through the Road Dog radio facility, and that was a comment that came back.
That's exactly right. And I presume, Brenda, that you talk to your teams about having those communications throughout the policy term. It's not one and done.
That is exactly right. And, I would say where, from the retail perspective, where a good amount of our E&O lies is just after we've actually written the policy, and it's in processing those changes and making sure that, a customer has confirmed that they want a unit added. A lot of people like to call and say, hey, how much does this cost? But they don't want to pull the trigger with, actually adding it. So, you need to be very specific in your procedures to make sure that you've got a follow-up procedure. Hey, we talked about it. Now are we wanting to do it? Just so you don't run into any issue. But again, pre-bind, during the underwriting phase, continue to speak to your customer. Guess what? If you started working that account 90 days out, I can almost guarantee you that 30 days out, something has probably changed in their operation if it's a little guy. And I can't tell you how many accounts we bind that need all UIIA endorsements the day after bind. And again, there's nothing untoward there, but had we known about it the day before, we could have placed it with a market that, could do all of those things. So again, this constant communication with the customer is really key in making sure that you have all the correct information and to keep you safe from, an E&O perspective.
Great. Well, Jeff, we're going to give you the last word on this conversation. What have we missed for you, my friend?
That's great. Yeah, I mean, I think a lot of this, a lot of this is really about, from my perspective, like tracking what's going on, being able, having the data at fingertips, really knowing all, things are moving in and out. And I really like what Brenda just said, actually. I think it's really, really important to know, like, even when things have been requested but not actually actioned, right? You should be able to kind of track through all the events that have happened. You should really be able to kind of tack through, and so that way, when things do come up, you could be like, yeah, they talked about that, something happened, right? But like they never actually executed the action. And I think so it's really important, obviously, like from my perspective, I'll say this, but like it's really important for you to have, systems in place to be able to understand the data, be able to track the data, be able to audit well, be able to speak, kind of upstream and downstream of where you're working, whether it's with the insured or retail or downstream, with carriers to really be able to understand like how things happened, what you knew, what you didn't know, what you couldn't have known, and so on. And I think that's really where things like, the place I fit into this picture comes in, which is how do systems help you do that? How do systems, get into the hands of, underwriters and operations and the brokers to be able to have those conversations, to be able to really wrap their hands around all of the data that's available in a meaningful way.
Well, fantastic. Well, to the panel, I feel a little bit like Christian Laettner in the '92 Olympics playing with the Dream Team. So I appreciate all you Hall of Famers out there. Thank you for your time. Thank you for what you do for the MCIEF. To all our viewers, I would encourage you to go to the MCIEF.org. Please sign up for membership. As you can tell with these talented folks, there's a lot to draw from. And obviously, Tommy, we love you. Thanks for being a part of the conversation. We look forward to seeing you here in the near future. And with that, folks, we appreciate you.